Travel is more than just ticking off countries. It's about the people, the culture, the food, the moments. I'm Pippa Hudson, and on Wonder the World, I invite you to join me every week as we explore destinations both near and far, with the help of fellow adventurers who share their unique travel stories. Listen to my podcast wherever you get them.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025. Good evening. Welcome to the program. I'm Stephen Grootes. I am expecting a slightly different program to the one we had last night. Won't be overtaken by events in the United States. And I've been thinking about it all over the last 24 hours. I'm sure you have as well. And I think in some ways we haven't been talking about anything else. I was putting a little list together in my head of the live events that most South Africans watched all together. So, and let's sort of take, all of the Rugby World Cups out of it because there's so many, I've lost count. But let's include, and I would say, obviously, COVID, and maybe not every single sort of family meeting, but quite a few of them. I would say, and certainly the first couple, I would say Polokwane in 2007, the announcement that Jacob Zuma had become leader of the ANC. I would say again in 2017, the announcement that President Ramaphosa would become leader of the ANC. And then I would probably add last night. Wherever I went today, wherever I was on social media, whenever I turned on the radio, there was Clement Otsidi talking about what had happened last night. So here's my question. When you went to bed last night, and when you woke up this morning and where you are now, has your view changed in any way? My view still is that Ramaphosa kept his cool, and that was the most important thing. I'm happy to entertain arguments that he could have been more assertive. I do think, though, if I were Ramaphosa and someone told me to be more assertive in the Oval Office, my response would be, you go ahead and try it. The question, what we don't know yet, is what happened in the meetings afterwards and what kind of trade deal could we end up with. And that's really what we don't know. And that's actually the only thing that really comes out of this. I mean, maybe Ramaphosa was able to show the international community that he was the adult in the room. I mean, he does that, doesn't he? Maybe he was also able to show that President Trump doesn't listen to facts, maybe. But the real thing is actually trade. And that's what we don't have. And I suspect we won't know for a little while, but it is going to be very interesting to watch. I'd like to know if your view has changed since this time yesterday. 011 8830 702 021 446 0567. Voice notes on 072 702 1702.
The Money Show
with Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app
and DSTV channel 856.
A really strong set of results out from Investec today. Its adjusted operating profit rose by 7.8% in the year to the end of March, made over £1 billion in profit for the first time, also paying out a record high dividend, and pretty confident it'll be able to keep this momentum over the medium-term future. Cumesh Moodliar is the CEO of Investec Bank. Cumesh, good evening. I do appreciate your time on The Money Show. You're lending more money to more people. Where is this new business coming from? How are you growing your market share?
Evening, Stephen. Thank you for having us on the show. Looking at the business, we look at across all the sectors we operate in, and particularly talking to our South African business over the 6 months preceding the end of the financial year, we saw activity pick up across both our private client and corporate client segments. And the interesting fact for us was, as we looked at the same lending books at the half year, which was around September of last year, we were actually flat to slightly back. And investment confidence in South Africa certainly was boosted post the announcement of the election results and and formation of the GNU, and you saw asset values being reset upwards in that immediate, what I sort of refer to as the honeymoon period post the GNU.
Okay, so the politics mattered, the result of the election and what happened immediately afterward mattered. Is it, I suppose, wealthier people with more money to invest that are coming to you and looking to borrow more money, and maybe some firms wanting to look at investing? In other words, confidence changed, and that led to more people coming to you to borrow money.
Yes, absolutely. So there was definitely a shift in investment confidence, and that led an extent, there was also, I think, some pent-up capex and further investment that was required. And as things settled, you saw the capital flows start, and people then feeling a bit more risk on and comfortable enough to then take on lending activity. So, in the context of a very difficult macroeconomic environment and looking at the year that's passed, a GDP growth level of about 0.8, it was really flat. And what we do see is still the opportunity in the niches we operate in for clients to be actively engaged and still pursuing opportunity.
It's interesting because I wonder how that confidence has changed, particularly with the fight over the budget. And yesterday, the fact that the minister gave a budget and clearly has the political support to pass it may well restore some of that confidence. I mean, you seem fairly confident about your future, but I wonder if confidence in the government and therefore the investment environment may have been shaken a little bit.
I think, Stephen, looking at that set of circumstances, was it ideal when the budget in February was postponed? I think by all accounts it was not. But as you look back now and over the last 2 to 3 months that have passed since then, I think the most important aspect that I take out of it, or factor that I take out of it, Stephen, is the fact that there was really a maturing of our democracy. There was a level of debate and engagement, and ultimately the centre held, and a budget was approved yesterday. So, to my mind, if you look back in the last 31 years of democracy, this was the first budget that had to be passed in a whole new process, in a whole new format. And clearly, there were some gaps missed or some I's not dotted and T's not crossed. But ultimately, through robust debate and at times very challenging environment, we saw all of that come through to have a budget that has been passed and that's been far more widely accepted.
We all know, in the global economy, what happens in the US affects the rest of the world. And there's certainly, for me to use the big phrase, Cumesh, rising levels of geopolitical risk. Doesn't really matter where you look, you will see that. Are you worried about the impact of that and the demand that there will be for credit?
Absolutely. I think geopolitical risk in any situation where you're seeing the rising levels of tension globally and fracturing of long-term multilateral trade agreements does give rise to concern. What we do see is the shifting sands, shifting on a weekly, daily basis, depending on which way you look at it. And is there a trade happening? The answer is it's happening before our eyes. And what happened in Washington last night, which I heard you referencing just as we were going into the show, is a critical moment again for South Africa. And one's hope is that there is some form of reset that's taken place, and that Team South Africa at the end of what was a very difficult session showed up better than expected and showed high levels of diplomacy and engagement and represented a non-racial South Africa last night. So I think as we get hopefully a reset, and the fact that we appreciate we would not want to alienate a large superpower and a large trading partner, and that we've got to find some middle ground to be able to have strong bilateral relationships that are mutually beneficial.
I don't know if you have any advice for the President and Team South Africa in dealing with the United States. I think for so many people, dealing with President Trump is next to impossible. There'll be a conversation, I'm sure, about whether President Ramaphosa should have gone. What do we do? And let me just also put this, it would help, of course, if we were moving more quickly to fix our own problems.
So I think your final point about moving more quickly to fix our own problems is absolutely probably one of the most key points for me. When I look at our South African, not just economy, but the South African geopolitical situation, the South African economic situation, the answers to a lot of what we looking at today is found in economic growth. And when I say that, it's inclusive economic growth, where you bring all sectors of society into play, and where we can rekindle the days of when we were nudging on 5% GDP growth, which has a significant impact on your employment levels. That in itself has a significant impact on, for example, bringing down your levels of criminality. So there's lots that we need to do. I think my advice would be that we really need to focus on speed of execution. In many instances, one feels a sense of dismay when you realize that the opportunity is right before us, but we score what I often call a number of our own goals, and we get caught in a quagmire of separate and often what I'd consider non-relevant debates. And in fact, in many instances, as I would say in the old classics, Rome is burning. We need to fix that, and we need to focus. That's the one point. The second point, which is really your first part of your question, Stephen, was as Team South Africa was the present. I think when you're dealing with a very difficult and volatile situation, what transpired in the White House yesterday was a team that actually was able to get through the theatrics of what we saw on TV to get into a lunch that by all accounts appears to have been cordial and a good conversation seems to have been had. That is the basic relationship building that we need to have back from a South African perspective. And I think from a geopolitical perspective, when I look at countries across the world like India and others, we've got to have a mindset of putting South Africa and its residents first on the agenda for our government. And that opportunity to be non-aligned but still hold strong ethical and principle views is what we can do as South Africa.
I mean, there's a lot of work to do there, and it is a difficult position. As Investec, you're operating here and in the UK, and sometimes that means one aspect of the business can offset the other. The lower cost of money in your results here the lower cost of money here help to offset the impact from deposit repricing in the UK. Is it becoming quite helpful that you're able to balance these two markets if you need to? Does it give you a level of comfort? And of course, the UK economy does have its own problems.
It really does, and I think the fact that we are able to offer South African clients the opportunity to engage with our UK business, that's certainly a differentiated part of our offering. The UK remains a very key global financial market. London is still, in many respects, a key financial hub for global financial activity, and Investec's presence there is now just going on to, I think, 32 years, and for us, that's a very critical part of our business, and we have key franchise that operates in the UK across core client segments, really being the private client and mid-market corporate segment. And, I think we take a longer term through the cycle view, and we can see the value of that franchise growing in many respects, and the opportunity for us to be a meaningful participant there is part of the Investec DNA and the core of what we've been building in our business from the time of our founders through to our current leadership, in our group led by Fani TT at the moment.
Cumesh Moodliar, thanks very much indeed. Really do appreciate the time and the thoughts. The CEO of Investec Bank.
Travel is more than just ticking off countries. It's about the people, the culture, the food, the moments. I'm Pippa Hudson, and on Wonder the World, I invite you to join me every week as we explore destinations both near and far with the help of fellow adventurers who share their unique travel stories. Listen to my podcast wherever you get them.
The Money Show.
The Markets.
Graham Kerner from the Kerner Perspective on the line to us now. Graham, good evening. A lot going on here, but I would like to start in the United States, and yes, with Trump. His big, beautiful tax bill, as he called it, going through the House of Representatives by just one vote. It will add literally billions, trillions to the debt bill of the US government.
Yeah, Stephen, good evening. I think it also has other potential implications. If you think about taking 10 million people or 15 million, depending on who you listen to, off medical cover, that's probably likely to affect the midterms and the next presidential election. So, yeah, it's got probably far-reaching consequences. But what we're doing is we are adding to let's call it the revenue collection problem, and we're hoping that we're able to push through the savings. So not great news if you're a fiscal hawk, frankly.
I mean, there's a lot going on in the US that will, in the end, affect us. I mean, I was struck by what Jamie Dimon said earlier in the week when he basically said markets are being too complacent about the impact of all of this. And he's done a big spread in The Economist. He hasn't spoken about that very much, but he's clearly making a splash, and he's clearly very worried.
Stephen, if people want to follow one sort of really wise person, I would argue following Jamie Dimon. I think you're probably talking about he did an interview with Bloomberg. It was yesterday. And they covered a lot of topics and just so thoughtful. And JP Morgan is one of only two non-tech, let's call it, companies sitting in the top 10 of the S&P 500. So he's got an incredible view of the global economy, of the U.S. economy. So when somebody like that says, maybe there are risks that are not being factored into and we're being too complacent, I think the world should really pay attention. But yeah, he's an incredibly astute person, and frankly, one of the reasons why JP Morgan shares are one of our bigger holdings in our offshore portfolio. It's just really well run, very solid thinking, and very, very measured individual, and as I say, really worth listening to.
Staying in the banking sector, very solid results, in fact, from Investec today, and they seem quite bullish about the future.
Yeah, if you look at it on a headline sort of number, it was a little uninspiring, but I think you've got to make some compensation. Obviously, currency effects is one, but also maybe the comparative created a slightly higher watermark. So I think it was about 1.5% earnings up, not great, but when you look further down, you look at, I think, pre-provision operating profit was up 8%, and you could see it in the dividend as well. So, yeah, it's a vastly improved business on where it was 5 or 10 years ago. And looking like all the South African banks, really cheap. I think it's on about a 7 forward PE. So, yeah, I think they delivered well, and it's a much better franchise, and I think a much better business than it was. And when you look at these sort of dividend yields in South African financials, particularly the banks, you sort of wonder, how far wrong you can actually go, because it's just incredible value. But Investec is very much like an ABSA or a Standard Bank, frankly.
And Life Healthcare, their results out today. Interesting to see that they see still very strong demand for private healthcare in South Africa, despite everything in the economy.
Yeah, I suppose strong is maybe a relative term. I think like Netcare, probably expecting sort of mid-single digits, maybe a little bit better than that in terms of patient numbers. But I think, in terms of occupancy, strange to talk about occupancy in a hospital group, but, not far from 70%, so quite a bit better than Netcare. But, if you look at it from a profit point of view, Netcare was actually able to do better with lower occupancy. But of course, Life is a business that's going through transition. It's obviously in the process of selling its offshore imaging business. That cash will be returned. But again, it's just the sort of paradox of the South African equity market. You're talking about a 10 forward PE, maybe even a little less than that. So, yeah, good value, but it's a difficult space. I think we have to say healthcare in South Africa is a difficult space. The number of lives insured and a whole lot of other things are not, it's not like I've got this massive demographic dividend, and swelling economy and people coming into private healthcare to really drive that, the occupancy and so on. So it's a difficult operating environment, but I think, like the others, doing the best they can with a difficult environment. And as I say, being proactive and looking within their portfolio at stuff that maybe is non-core and looking to return that to shareholders.
And Pick and Pay today, confirmation Sean Summers will stay on as CEO until 2028 to oversee the sort of turnaround there. James Formsby stays on. He becomes the chair. All of this pushing the share price up quite nicely, and there was a late update as well on earnings.
Yeah, very much so. And I think, particularly James, obviously knows the business quite well, and also Boxer as well. And obviously he's going to relinquish that role moving into the chair seat. People like that are very, very competent, very seasoned. And from what I can see, he seems quite optimistic about the future and their potential, notwithstanding, all the challenges that the likes of ShopRite throw at them. But, I think that combination, the market clearly, taking a positive view on that. And I think it's still a long way for, Pick and Pay to sort of reclaim some of its past glory, but definitely some positive steps being taken by by the board, and I think the appointment of James to chair and retaining Sean Summers definitely the first step in not the first, probably the second or third step in a very long journey.
Graham Corner at the Corner Perspective, really appreciate that. Thanks very much indeed. Lots to look at, of course, and just watching the sort of shakeout from that US debt issue. Lots to look at there. You're with The Money Show. It's just gone 6:30.
Stephen Grootes
Taking your calls
on 011-883-0702.
David on the line from Glen Vista. David, hi, good evening. Last night's Oval Office, I don't know, what do I call it? Showdown? What do you think?
Yes. I think the performative part went well. I think our president deflected the problems very smoothly. I think he's a really good schmoozer. But the important thing, and I think you alluded to it, is what's going to happen behind the scenes. My evaluation would be, one, did we get some kind of replacement for AGOA? In other words, the deals on the minerals, fruit and produce and all the cars. Secondly, is there agreement to reduce the laws that make FDI like Starlink so difficult? Thirdly, did we get investment assistance with crime and farm murders, drones, Starlink, etc. comes into the picture? Fourthly, does the refugee program continue? And fifthly, do we get some replacement for the AIDS aid? And sixth and last, what if anything happens to the ICJ issues, Hamas, Iran? And I think we have to wait a little bit and see how many of those issues have actually been attended to.
I was going into this about a month ago. I thought that the Israel issue would actually be the issue. I was amazed it wasn't last night.
I didn't expect it to be, because that's not something I think that Trump really wanted to raise as publicly as he wanted to raise the refugees issue. But I think indirectly it reflects on the Israel issue, because we say there's genocide in Israel.
And they say there's genocide here.
But there's genocide here as well. What are you doing?
All right, David on the line from Glen Vista. And of course, we all know the genocide claim is not true. I'm always intrigued by the fact at this point, by the way, that AfriForum has made it very clear it does not believe there is a genocide here. And they do seem to have had some influence over Trump. I do wonder if at some point AfriForum and Trump, or AfriForum, may need to sort of publicly disagree with Trump on some level.
702. Stephen is on The Money Show.
6 to 8 p.m.
An interesting comment today from the CEO of Life Healthcare, Peter Wharton-Hood. He told Fin24, or he was reported by Fin24 as saying they're expanding in the Western Cape. They see more demand for medical services, private medical services there, and they can do this without actually in any way harming their business in Gauteng. The company reporting its revenue from continuing operations up by 8.1%. Patient occupancies up slightly to 68.6%. Peter Wharton-Hood, good evening. Good to talk to you again on The Money Show, and thanks for your time. How much more demand for private medical care do you think there could be in the Western Cape?
Well, it's more a function of human migration, because the plot we've picked in the Paarl Valley, it's estimated that there'll be another 10,000 houses or so built around or in that area. So clearly, it's a place where people will want to live, and I guess it's about being where the puck goes. So we understand that the human migration development, and that will prompt demand. And we know we have access to clinicians who want to work there, nurses who want to work there. And after extensive investigation, we've made the decision, and that's what we're going to do.
The doctors, of course, are the kind of people who fit very nicely into the demographic you want to serve there. Of course, they would want to go there.
Well, it's all in estimating where we think demand for services will arise, not dissimilar to what we did 10 years ago when we built Life Hilton.
We heard from one of your competitors earlier this week, and they made the point that over the last little while, there's been slightly fewer patients coming into their primary healthcare facilities, but the patients who are coming to their hospitals were slightly more ill. I think the measure they use, I'm sure you use the same one, is the case severity level. And they said that their case severity level was actually higher now than it was in 2019. You may measure, I don't know if you measure things in exactly the same way, but are you seeing something similar?
Well, what we are seeing is activity levels in the hospitals returning to pre-COVID levels, and we have seen the length of stay go up. So I think that our data also correlates with our competitors' views, because if the length of stay has gone up, one would tend to assume that the severity of the cases admitted had increased as well. So that logically does make sense.
I mean, you spoke about the tough economic environment we're facing at the moment, and obviously that means some people might delay getting medical treatment. You have suggested, though, that the number of insured lives is staying the same, but the membership of those schemes is getting older. Now, quite a lot of things are happening here. I mean, it may be that people are actually living longer, so they're healthier for longer too as a result of that, but as they get older, you usually need more treatment more often. I'm told that's what happens when you get older.
Yes, I'm experiencing that, and I think what one sees is if the average age is going up, it means that there are fewer younger members joining the schemes, and I think that also exaggerates the average. But as we would concur, older people do require more medical care, and in so doing, the demand for care will go up as the average age increases.
There's a lot going on in the medical healthcare sector, and of course people will talk about NHI. We keep being told that doctors, maybe nurses, are leaving the country. There's a shortage of both nurses and doctors. Do you find it tough to actually find people to fill the positions that you do have, especially when you're looking at expanding?
Well, as we said in our report today, we've recruited 71 doctors during the course of the 6 months, and I just want to slay one myth. This is not a mass exodus of specialist clinicians out of South Africa. Of the proportion of doctors that we lose either through retirement, moving to competitors, or pass away, the proportion that leave to go to foreign lands is extremely small. In percentage terms, single digit. And actually, in fact, what we have seen in the 12 months prior, and I don't have the exact number in front of me, but a proportion of those doctors that actually left returned to South Africa. So the constraint we're dealing with is not the mass immigration of specialist doctors. What we're dealing with is the training of specialists. So we're finding that general practitioners, qualified general practitioners may well be leaving, and we don't have enough posts to train specialists for the future needs of the country. So that is the conundrum. That's the real problem that we faced with. The problem is not today's problem. The problem is the problem we can see coming 10 years down the line. Insofar as nurses are concerned, we as Life Healthcare have been saying for years now that we need to train more nurses, because if we're going to deliver on the demands to make healthcare more accessible and more affordable, this country just doesn't have enough nurses. And in actual fact, the world doesn't have enough nurses.
So, I mean, I understand that, and I think you've made that point before, and others in your space have too. Nursing unions also tell us that there are nurses sitting at home doing nothing, and I can't help but feel there's a government management problem here somewhere, and maybe it's about the financing of government hospitals that's created this situation.
Well, and if you don't like the answer, then just blame the data. What we're seeing is it is difficult to get qualified nurses at the correct level to staff hospitals on a reliable basis. And if there are nurses sitting at home, please, there's work for them to do. Please come to work. And I don't believe that there are nurses who want to work that are sitting at home doing nothing. But there are, as there would be, I'm an accountant, there are accountants who qualified as accountants who are no longer working as accountants. So I think we need to get to the root cause of the problem, which says, can we reliably identify where the talent sits, and let's get them into the right place, understanding that the long-term need is to train more nurses, if not just for South Africa, train them to work in other countries, because there are shortages all over the world.
Peter Woodenhood, thank you very much indeed, CEO at the Life Healthcare Group. When I had my appendix out in a British hospital a long, long time ago, the first language I heard when I woke up, the two nurses who were treating me and making sure that I woke up safely were speaking to me in Zulu. It's 11 minutes to 7.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025.
011-883-0702-021-446-0567. Well, yesterday on The Money Show, you heard an unfortunate incident where I had to interrupt the Finance Minister, Enoch Godongwana, because his boss was speaking at the White House. Lots of people, of course, going through yesterday's budget. We've had a moment or two to take a breath and see what is going to change and what isn't. Peter Atteld-Montalto is Managing Director at Grootes. And Peter, good evening. You've had time now to look at some of the details in the budget. So no new taxes. There is an increase in the fuel levy, a slightly higher debt. If you take the whole thing together, is this the right set of choices considering the situation that we're in?
Good evening, Stephen. Well, I think what we can say is that this hasn't taken the difficult choices yet, for sure. We've trimmed some provincial spending, particularly on health and education. The problem's been pushed down to lower levels. It's a repeat of what we said in previous years. That may well come back to bite both, obviously, provinces and politics and Treasury later down the line. They have been conservative, though. They haven't put in these SARS productivity gains for the current year, so there could be some upside surprise on that front, offset by the fact they're probably still a little too positive on growth. But overall, it sort of broadly adds up. But we haven't yet seen those big, difficult political decisions around the historic spending reviews and programmatic cuts, which is ultimately what has to happen.
I mean, what we need is to kind of enable economic growth. And I realize that a budget has to do many things and not just that. But is this going to change the direction of government or our economy in any way, what was announced yesterday?
Well, no, but I think we've had this debate on the show before. Budgets aren't really for that. There are important reforms going on electricity, that are going on around transport. This is all happening outside Treasury. Now, Treasury certainly involved to a degree, but the sort of locus of policy or political capital in these things happens elsewhere. There are positive things happening there, but again, it's not really about the budget. What we need is those reforms to come through to provide the tax space, the additional revenues, to allow a much maybe less heated discussion around prioritization and around what the government should be spending on.
The promise of reform, and as I understand it, and from the budget speech, the presidency and the National Treasury will look for projects that will then be cut. And the minister was very confident. He said he had the political backing to do that. Do you believe that's going to happen? I mean, in our politics, if you switch off a tap somewhere, someone is going to shout.
The vested interests will squeak, yes, exactly. Let's remember that this was an attempt to do this around the broader restructuring of government in 2 years ago now, the MTBPS, and that failed. The political capital that maybe was initially available from the president, we believe, was then withdrawn. But there's certainly cross-GNU support for this. The DA obviously has pushed this very strongly. And Treasury, of course, has all the technical work already done. GTAC has already done the spending reviews. I think people don't quite realize that. It's the political choices, the prioritization, those cabinet-level discussions. That's really what has to happen from here. So, no, I think your skepticism, given history, is probably justified, and we wait to be proven wrong.
I mean, the one thing that the president could do is just blame the DA, and they'll probably be happy because it'll play nicely to their constituency, and that wasn't the case 2 years ago.
Exactly. It fits into the good governance narrative for them, and you can get a nice little spat from the ANC side. I think that's a sort of, ironically, level of maturity we actually have to see in the GNU, where people take wins and both sides can take what they want from a particular issue.
Well, they're both going to claim victory over the NHI at some point. Peter, you were on hold to speak to us last night. We were disrupted, of course. You would have seen what happened, the president with the US president. An impossible situation. Should Ramaphosa have been more assertive? Does it really matter what he says there when the real story is the trade deal, if there is one?
Well, there definitely isn't a trade deal. I think we've had a big problem here with the media in South Africa, who's basically taken what the government of South Africa wants to put out without any balance. There's no leaking going on from the US side into the media. So we need to be very, very careful about the optics here in the South African media. There is no deal. I think we need to be quite clear that there's an awful long way to go in terms of what the US is after on even just pure historic issues, bone-in, bone-out chicken, pork, all these sorts of things, the copyright bill, all that kind of stuff, before you even get to the foreign policy positioning aspects, the BE aspects and all that kind of stuff. But no, yesterday was really about the top priority for the Trump administration, which is the refugee and the Afrikaner issue. And I think, minimally yesterday was successful. As the president said afterwards, there wasn't an implosion. They prevented that. But we really need to ask the question, what next on trade? And really, there's still a long, long way to go. And a lot of technical and very detailed, both political work and technical trade work to be done.
Peter Attard-Montalto, thank you, Managing Director at Grootes. Chris Hutting is listening to that, Executive Director for the Centre for Risk Analysis. Chris, good evening. Do you agree with that sentiment that actually, last night might all have been about performative? I wondered if Trump just wanted to sort of beat up Ramaphosa before the talk started.
Good evening, Stephen. Thanks for the opportunity. I very much take on board what was said just now. And I also just think from a domestic U.S. politics point of view, this kind of thing is not necessarily always for the global media, but for the domestic U.S. media, where You've got the administration under various points of pressure. You've got the lead up to the midterm elections. For President Trump and his cabinet colleagues, they have to use every opportunity to push a certain narrative and to mine, as it were, whatever they can from that particular narrative from a domestic sort of grievance point of view. So I think that also factored into what happened yesterday. And President Trump, I mean, with his tariff negotiations, with various other things, he tries to keep his allies and his opponents on the back foot wherever possible. So the fact that it happened in front of the media to him would just be a bonus.
I mean, one of the problems is, as I see it, Trump will not change his mind. I mean, there's a famous sort of Keynesian phrase that when the facts change, my opinion changes. Trump does not accept facts, does not change his opinion. How do you even go into a negotiation with someone like that? I think you just have to sort of withstand it in a way.
I agree, and I also think it depends what you can give him in terms of grabbing his attention. So whether that means that whether you accept that you then have to compromise on some of your principles and values, which obviously one wouldn't ideally want, or that you try and find ways to own the agenda. So how President Ramaphosa, for example, started by talking about gratitude for the respirators and critical minerals and that kind of thing, where President Trump, he is many things. What he is not is very attentive to minute details. So I think he's going to focus on what was last in his mind, what was discussed in front of him. And if you can occupy some of that real estate, as it were, to use some of his terminology, what he likes to think he's good at, then maybe you can diffuse and then own some of the agenda. It's never going to be a complete win because he's also got his own interest groups and cabinet colleagues who are going to vie for his attention. But if you as a country engaging with him through various interlocutors can grab some of that attention for a short attention span, you could get some purchase from it.
I mean, what you really need is to get your business partners in the US to put internal political pressure on him. And that's surely the way to do this. That should, in some way, I would like to think there are people doing that right now, having very long conversations with those people to put pressure on him in that way.
Yeah, and that's the longer-term serious work that you need sort of outside of the cameras and the optics and the glitzy headlines and all that kind of thing. That is where, unfortunately, good ideas devolve into hard work. So I'm very much on board with that. And I'm sure that is happening in various sort of streams, as it were. Obviously, our president and the government like to work on things like work streams, work on that idea. We should have similar endeavors there in the US, but also in other, of course, global capitals. I don't think we should be putting all of our eggs in that basket, in the AGOA basket, in the US investment basket. I don't want to underestimate it or discount how important that is. But from a risk sort of concentration point of view, it's going to be a more volatile presidency and administration, and you can't put that much jobs, that much investment, that much capital in the sort of vagaries day to day and the ups and downs of this particular administration.
Chris Hutton, thanks very much indeed. Really appreciate the time. Executive Director of the Centre for Risk Analysis. Well, what are you expecting to come out of Team South Africa? And do I call it Team Trump? I should call it Team USA. 011-883-0702 021-446-0567. What kind of trade deal or any kind of agreement at all would you see as some sort of victory? Good to hear from you on The Money Show this evening. It's 7 o'clock.
And now, The Money Show
with Stephen Grootes on 702.
Let's walk the talk.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025. Good evening. Welcome to the second hour of The Money Show. I'm Stephen Grootes. Lots to come in the next little while. We'll talk about techs across the tech industry across Africa in a moment. Bulalani Balabala will be talking about how you turn no into fuel for your small business. And then don't forget Investment School this evening. Karabo Makete and Vincent Anthonyrajah talking about the power of governance, how you shape a corporate direction, the direction of a corporate. There's lots to talk about, of course, when we come to that. Good to hear from you this evening. Very intrigued if your view of what happened last night has changed in any way since it all happened. As you went to bed last night, you woke up this morning, do you still have the same view? 011-883-0702 021-446-0567 and voice notes this evening on 072-702-1702.
The Money Show.
With Stephen Grootes, live on 92.7 and 106 FM. Streaming on the Prime Media Plus app.
And DSTV channel 856.
Well, news from the Transport Ministry, Transnet getting a loan facility, well, it's the Transport Ministry and the National Treasury, a loan facility of 51 billion rand, basically to help them refinance their debts. And of course, their real problem is they're trading with a huge amount of debt. At the same time, they have to manage these big expansion plans. And on top of that is the sort of private partner, if I can call it that, the privatization, according to the unions, of Pier 2 and eThekwini at the Durban Harbour and other places too. There's a lot going on around Transnet. What is kind of hard to see at times is if everything is pulling in the same direction. And I'm reminded of a conversation we had just last week about how aspects of the Competition Act they've effectively been exempted from those for quite a long time so that various suppliers can work together in building the ports and in some cases, I think, even the railway lines. It's one of those things where we're going to hear all sorts of noises for quite a while. And we won't ever wake up one day and think Transnet is now fixed. That's not how these things happen. Instead, it's a very slow process. And one day you'll go into a port or something will arrive more quickly than you thought. And you'll think, oh, it is fixed. Now, this has happened before. It happened at Home Affairs, actually, a long time ago, kind of 2014, maybe before that. There was a time when it just took ages. Mvuso Mzamang was the Director General. There were other people involved, of course. They digitized the whole thing. And I'd have people phoning me and say, Stephen, I got my passport in less than a week. Well, maybe the same thing will happen again in our ports. Let's hope so.
702. Stephen is on X.
At Stephen Grootes.
Well, the last decade, I suppose you would call it up to the pandemic, we saw all sorts of funding of tech startups. So, a week would go by without you hearing about some startup that had got money from somewhere. It was happening in Joburg, Cape Town, Nairobi, Cairo. And research suggesting that, in fact, the amount of funding available for tech startups in Africa went up 700 times. It was Africa Day on Sunday, and Siphumelele Zondi, our tech expert, looking at the question around whether Africa is still rising in the tech space. Siphumelele, good evening. There was all of that money going into the sector, I suppose you would say, from around 2015 to 2020. What's happening now? Are people still getting money?
Well, it's that sector and other sectors, Stephen. Hello, and thank you very much for inviting me again. We don't have to look that far back. We can just compare, let's say, 2023 and 2024, where there's already reports by research by a company called Brighter that does market research that says there's been a 19% drop in the deals that have been concluded in Africa in just that 1 year, 2023 to 2024, that have been concluded in Africa in this space, in the tech space. So we don't have to look that far back to 5 years ago, just in 1 year. And then you think about this year and what's been happening with the trade war and a lot of the DEI funding that has been blocked, because a lot of the funds that end up in places like Africa and the rest of the global south could be DEI funds. And with that stopping in the United States of America, in all likeliness, and the trade war as well, in all likeliness, there's going to be even a bigger crisis this year.
I mean, what kind of tech startups are people still interested in? Are there particular aspects? And I mean, TikTok is not a startup anymore, but everyone just keeps telling me that's where money goes.
Well, there are different types of startups. Because when you think about, for example, there's a startup called Yoko in South Africa. They're into card payments or payment services, and they went all over the world last year, especially in Europe, to raise funds. And so they're in fintech, right? So they managed to get a lot of money. And if you look at West Africa, that's where the money is. Agri-tech is still big in parts of Africa, and also with the increase of people shopping online. So you likely going to see that as well. So it's all over the place, really, when it comes to the African continent. It's also because Africa has been sluggish and slower than the rest of the world. But at the same time, where we've been great is that we have been great in mobile money services in Africa, which is where we've pretty much have been outshining everybody else.
I mean, that's absolutely true. I mean, people talk about it all over the place. Venture capitalists, have they slowed down the amount of money they've been giving to African startups? I mean, there are obviously other places, and the tech sector generally is hopping.
Totally. So it has been said there's a conference called GTEX, for example, that takes place in Morocco, where this was a big discussion on how venture capitalists have slowed down the amount of money that has been going into African tech startups. And the worry is that they'll be turning to debt funding, but at the same time, debt funding is different from venture capitalists who can fund ideas or projects in ideation phase, or people who might have a prototype and haven't gone to market yet, whereas debt funders don't go that direction. They want proof that the concept is actually working and it's launched in some markets a lot of the time before they part with their money. And the way VCs work is that they might fund, let's say, 10 different startups. They do know that a couple of them are going to succeed, but there are some that are not going to succeed, but they're just hoping that they'll make their returns with the few that do succeed. So the differences, and that's where VCs are actually needed in this space.
There's some startups, they look sexy, they're going to do this, they're going to do that, everybody talks about them, and then someone comes along and buys them, and they sort of, end up being a part of a much bigger business. And I mean, arguably the same thing happened with Instagram. The same thing actually happened with YouTube a long time ago. This is obviously happening in Africa too.
It does happen. When you think about the big one that almost everybody talks about, which is M-Pesa, which changed the way we make transactions and which basically made us start to use our mobile phones to make transactions. It was a university student out in Nairobi who developed M-Pesa, for example, and then it's now owned by Safaricom, which is partially owned by Vodafone and Vodacom from South Africa. And so it's a big tech company that went and bought them over. And this does happen time and again. I think in the case of South Africa, where there was an app called Bottles, they used to buy alcohol there. It was a startup, Pick and Pay bought it, and they turned it into Pick and Pay ASAP and relaunched it and rebranded it, and they did their grocery deliveries using what used to be called Bottles. So yes, this is also some of the issue, I suppose. But I suppose when founders create these companies, they do it for different reasons. Some do create companies. I actually remember speaking to somebody who said they get joy in creating something new, selling it, create something else that's new, sell it, and so they get joy in that. They don't want to keep it. They want a big company to come and buy it from them.
There was a while ago, there'll be a question on who owns the startup. Is it owned by African people? Are they being launched here but actually not owned by us? And that leads to a much more complicated question around identity. I suppose in a way, Siphumelele, when is a startup African and when is it not?
And that's the thing, right? Because like Kenya's been called the Silicon Savannah, for example, because a lot of startups launch there. But there's also this worry that out in Kenya, one or both founders would not be from the country. I guess it's fine if one of the founders is from the country. But if both founders, or if there are more founders than if they're not from the country, I think about Jumia, for example, which is a startup out of Nigeria. They do online shopping. And the owners are from Eastern Europe, but because their markets, and I guess they saw a gap, and I guess it was easier in Nigeria, that's where they went. And I guess it also depends on the country's laws, because if they do allow foreign-owned companies or people who are not from the country to go to the country, start a business, register it there, be affiliated with whatever they need them to be affiliated with in the country, then they would say it's a local startup. But locals often complain that it's sort of like these European organizations and sometimes Chinese startups that go and launch there. They just use them as a market that's going to be purchasing whatever it is that they're selling, but they're not really from there.
There's so much to it. I mean, the other question, of course, is whether we have an enabling environment for startups. And this is something we've been speaking about in Small Business Focus all the time. I mean, we have, and there's such a wonderful phrase, we have a registration of a new business culture, but not a sort of new business culture, if you know what I mean. And I don't know if our continent allows us to sort of really have that big sort of massive tech startup ecosystem.
Well, that's the thing, right? Because we sort of use Silicon Valley as our model, but is it really a model that we can easily adopt in Africa? Because I even think about, for example, our markets developed enough to support the number of startups? Our capital markets, are they developed enough to support the kind of startups that are coming out of Africa, or a huge number of startups that are coming out of Africa? And maybe those are conversations that we do need to have, because it seems like we want to copy and paste what happens in Silicon Valley a lot of the time. Hence, we want to keep Silicon Cape, Silicon Savannah, Silicon whatever else is happening. But maybe we need to look at the African DNA. And also, our countries don't function the same, because sometimes, like we having tonight, we have a big African discussion when it comes to tech startups. But as we've seen with M-Pesa, for example, when it came to South Africa, it did not work as well. It came here a few times, actually, and shut down a few times. Because it did not work as well as it does in Kenya and other African markets, because a lot of people have bank accounts in South Africa. But maybe another question is, could it not have worked differently? Because it also works in matatus, right? You use it to pay for a matatu, which would be the minibus taxi in the context of South Africa. Over there, minibus taxi in South Africa, you still use cash. Could there not have been a way to meet up with those guys, for example, and look at how to tailor-make it for a different market?
Siphumelele Zondi, thanks very much indeed, our tech expert.
702. Stephen is on The Money Show.
6 to 8 p.m.
Small Business Focus is brought to you by Capitec. No matter the size of your business, Capitec's got you. Bulalani Balabala is a business speaker and township entrepreneur in our studio now. How's it, Bulalani? Good to see you again. You're talking about rejection, and no one likes to be rejected. You suggest you can actually turn rejection into fuel for your small business.
Yeah, definitely. I think one thing that is definitely guaranteed in business and just generally in life is that you're definitely going to get rejected.
Yeah.
Whether it's a romantic proposal, it's a business, it's a work proposal,
Oval Office, whatever it is.
Yeah, it's either you're rejecting or you're going to be the one who's rejected at the end of the day. But however, I think what I've picked up over the years is that your perception around the rejection and how you utilize it as fuel. You could literally utilize it as a fuel for growth or fuel to burn yourself to death and sit in a corner and wallow.
How do you use it to actually help yourself? I mean, what do you do? And I know for some people, you read biographies, they often have a sort of moment of rejection somewhere early in the story.
No, definitely. I think the one biggest winner for me has always been, number one, you need to make sure that you ask for feedback. Why are you being rejected? It's important for you to understand that, because sometimes you might think that you're being rejected purely because of the value of the service that you're offering at that moment in time. But you might even find that you actually came at the wrong time. And sometimes we don't give the clients the opportunity to actually tell us that it might not have been the right time. I'll make you an example. You know, you're going to someone, you're selling medical aid or you're selling life insurance, you're selling any other products, any product that has got a switching cost, that individual won't jump in at that particular moment. Why? Because if they exit at a particular cycle within that particular premium, they lose whatever it is that they've invested. So it's important for you to be able to understand the industry, understand the individuals, the clients, but most importantly, ask why and how, what could we potentially have done better? You might even find that it's got nothing to do with you, but everything to do with the customer. Maybe they even serviced well and they would be more than happy to refer you to someone else.
I mean, sometimes if you just you're told no all the time, and you can spend days trudging around literally looking for customers. How do you sort of keep showing up when that happens?
I think for me, think about it this way, right? We each and every day we develop pipelines, whether it's daily or whether it's weekly, right? Pipelines of prospective individuals who, after we've spoken to them, become leads. From leads, the ones will fall off and then we quote, and then from quote, some won't come back. Then some would actually pay those deposits or send, confirmation of orders. I think for me, how I've sort of picked it up over the years is, as long as you've done the deep work of, number one, what am I offering the right type of things? Are they giving me a thumbs up on the product and service? Number two, Have I done the deep work of understanding if my pitch is actually the right type of pitch? And the moment I've done that, then it's clear for me to understand that it was not a no that you got. In actual fact, it's a not yet. Because I look at my entrepreneurial journey over the years, some of the clients that said no were the ones knocking on our door saying, well, finally, here's a gap. The person we normally use can't show up to the party, or they're not available, or they disappointed us. This is your window to shine. Are you able to help us? And majority of the time, it's the individuals that I've spoken to 3 years back or 4 years back or a month ago who were solid, and their no was very solid. But here's an opportunity and a window of opportunity. So I think for me, it's equally important for you to understand that you are sowing a seed for those individuals, which is why even if they've said no, I mean, set a reminder on your Outlook or on your phone, on your calendar, to then check in on them 6 months in, whether it's 12 months in, to check in on them. In and around, how are you guys doing? Don't even make it a sale. Make it a deep human connection. You will build a long-term sale that way.
Are there practical steps? I mean, you talk about setting calendars, going to approach them. Are there other things? And I wonder sometimes if you also need to change your approach or send your other one employee to go and have a go.
Yeah, I think for me, the biggest mistake that you'd ever make is to think that, number one, is to think that the problem is the customer. Because no one grows when you consistently think that the no's that you're getting is purely because everyone is wrong. Everyone can't potentially be wrong. So I think for me, it's important for you to consistently check that pitch deck. I mean, a number of the things that I do is that, I send some of my pitch deck to industry peers. That are individuals who are in that industry, number one. Number two, I also then send that pitch to individuals who might potentially look like the profile of individuals who would be looking at this particular pitch and ask them for feedback. And you'd find that in most cases, you are able to solicit different views and different perspective. And this is not just on pitch decks, guys. This is on your company profile. This is on that specific pitch deck for the particular organization and corporate. Because sometimes we internalize our views of our businesses and we assume that the customer sees us like that. So we never hardly ever take the time to actually ask the customer before we even draw up a pitch deck or go to market with our new positioning. Why do you buy from us and what do you think has kept you coming back to us? The moment you take in that feedback, then it's easier for you to grow, a solid business. So it's that consistent feedback and how to loop. You're getting in the feedback, but you're also quickly iterating and putting it back into the market and structuring a very solid business proposition.
When you go and you knock on doors or you're phoning people and they say no, and you'll feel a particular way and you'll think it's about you, it's about your personal worth. You will feel it will affect your confidence. You will start to feel that actually, never mind as a business person, as Bulelani, as Stephen, as the human being, I'm actually not worth anything. And that can be, there's a maturity that you can learn to overcome that, but that can be quite hard, quite tough. How do you sort of separate those two?
Definitely it is hard. And sometimes when you internalize it, it sort of questions your self-worth and self-belief. And I think in the words of, one of my mentors, it's not personal. And I think I heard these words being echoed to me 10 years ago when I was just been disappointed, and the supplier who disappointed me was very prominent, and we are about to lose a lot of money. Well, in actual fact, they disappointed, guaranteed that we're going to lose a lot of money. And I think his vantage point and view is, don't be disappointed. Think of it this way. If they didn't show up, it maybe potentially means that you were not as valuable to them as you should have been. So you could do a couple of things. Number one, be wary of the people that you go into business with. Number two, build your value up in such a manner that you're undeniable. They've got no other way but to show up for you consistently. So to simply take that all in and internalize that, puts you in a position of paralysis. The moment you're in paralysis, then you know what creeps in, self-doubt. We know what self-doubt then leads to. It leads to, depression. The moment you're in a depressed state, then anything is potentially possible that is negative in that moment in time. So don't wallow in that moment. Take it in, but also push it to the side and say, I've done everything that I need to do. It's got nothing to do with me. It's just business.
Bulelani, so good to see you. Thanks so much. Thanks for coming in. Bulelani Valabala is a business speaker and township entrepreneur, a man with great experience. What does it say on his hat? No, he doesn't wear one of those hats. It says, get things done.
The Money Show.
Investment School.
Time for Investment School on The Money Show this evening. Can you imagine owning shares in a company and watching it just being mismanaged, watching it just slowly losing value? Your shares are losing value. It could be a great company with a great product, could have a great and proud history. What do you do in those situations? And imagine just for a moment those dark days in 2017 where maybe you held shares in Steinhoff and you sort of watched things just implode so quickly. So tonight on Investment School, how do you, as an investor, actually influence what is happening at a corporate governance level? Karabo Makete is partner and investment principal at Aions Ventures. Vincent Anthonyrajah, CEO and co-founder at Differential Capital. Thank you both for coming in this evening. Vincent, let me just start with you. We all know corporate governance is important. Judge Mervyn King wouldn't have become, a king without having to talk about that all the time. But what influence can an investor really have? You are an owner, but you don't always have the influence you want.
Yeah, good evening, Stephen. That's right. It's quite unfortunate for most investors, retail investors. Most of us, for big companies, we're such a small part of the shareholding that it can feel like we don't matter. But fortunately, over the last 20 years, just the real focus by investors as a whole, by various regulatory bodies to ensure that there's better corporate governance, and we'll go into what that means in a bit more detail. But the fact is that boards have to start paying attention because they need to look after all stakeholders, including not just shareholders but employees, clients, consumers of the underlying product that the companies are making. So this increased focus on that means that there is a potential that someone who has as much as one share can carry a voice, particularly when it comes to the AGM, where there's not only an opportunity to write to the board ahead of it, but also to exercise your vote. And I think it's important that shareholders realize that they have this power.
It was interesting, Karabo. I mean, the most recent example I can think of is Barlow World, where shareholders did exercise their vote when it came to remuneration and basically said, we're unhappy with things. Does it happen very often, though, where shareholders actually sort of get actively involved in corporate governance?
I think it does happen quite often, but it is very limited, as has been stated previously. You only own a certain amount of shares, and you don't have as much voting rights as the other majority shareholders. So, of course, it does get very tricky and challenging to have your voice heard. But the involvement and the participation of all shareholders is supposed to be encouraged and taken into consideration when such issues are brought up.
I mean, the other way that you always have influence as a shareholder, Karabo, is that you can sell the share. And if enough people do that, well, the message should get through loud and clear. I mean, the management may not want to hear it, of course.
Yeah, that's true. But you don't always want to sell your share in order to have your voice to be heard. That's not always the best way to go about it. An interesting way that we look at it as seed funders is that we usually have a very small share percentage within the company. And in order to be able to have our voices heard and have some sort of control on how shares, how the powers and the governance within the company is operating, we try to look at smaller sort of elements that we can utilize, such as having milestone-based funding, where we don't just give all the money once, we give it step by step, and we put the milestones together with the founders themselves, just to ensure that we're all on the right track and our voices are being heard, even if it's not the biggest voice or the loudest voice in the room.
You basically keep the levers to yourself.
Yeah, as much as we can.
Vincent, it's not always clear what's actually going on. And the Steinhoff is the obvious example because people really didn't know, even the auditors. So how can you tell? And there are different ways to contrast companies. Can you always tell what's actually going on? And I suppose you'd look at levels of transparency.
Sure. So I think when it comes to highly complex accounting fraud, I think it's safe to say that, the average investor, and in fact, most highly educated investors miss that one, and you're going to miss those. But there are many examples, Stephen, of where companies start to make slight mistakes that's compound and add on themselves. And I always think back when I started in investments to there was a gentleman. I attended the Old Mutual PLC AGM, and this was in London. And it was quite amazing to see a few small shareholders come up and have their voices heard on a lot of the investment decisions that the board had made. And for an investor that's paying attention, that reads the annual reports, that pays attention to how the capital is being deployed, and and that sounds complex, but here's a simple way of looking at it. The dividends that you would have received are often withheld by the company to reinvest in its operations. And those are your dividends. That's your capital as a shareholder. Now, paying attention to how that capital is being spent and how the people spending it are being remunerated are relatively easy things that you can do. It's not that complex. And you could read the remuneration report and those things like that. And that's where you have an opportunity to make your voice heard. And what we're finding today is shareholders can also get together and share their views with others and club together, and on especially issues like remuneration. I think the Barlow World is a great example that you brought up, where many shareholders got together, emailed each other and said, I've noticed you on the shareholder register. What do you think about this? Do you agree, not agree? And I think it is quite interesting that more and more of that's happening, and it should happen. And I think as someone who's invested, it's your capital. I just want to go back to the earlier point that you made. You could sell your share, but sometimes the share has so much value that selling it is pointless, So you'd rather hang on, try and influence things as much as possible to earn that value that's sitting latent in your investment.
Yeah, you don't want to sell your surpassed share, do you? You want to hang on to that.
Definitely not. Yeah.
Karabo, so okay, you've got to read I suppose it's a good start. You've got to read the annual report. Are there other things that you can look at? You can maybe look at the public comments of the people who are managing the company. I suppose the other thing you would do, obviously, is look at their rivals, people in the same market, and look at the decisions they're making.
Yeah. And I think maybe contrasting those and comparing, if the industry is moving in one direction and the company that you own shares is moving in a completely different direction, I think it's a good basis to start to look at what are other companies doing, and what are other shareholders doing in that company, to make sure that their voices are heard and that their inputs are being implemented by the people who are actually running and managing the company.
I've spent a lot of my life as a political reporter, and one of the hardest things is to get someone to answer the question. So, Vincent, when you are a shareholder, how do you get someone to answer the question?
So the setting is really important, Stephen. So today we actually had a group meeting with one of the large listed companies where we were grilling them on remuneration and things like that. So sometimes the AGM is not the right place to have those kind of discussions. We're quite fortunate that some of our companies are quite open to meeting small groups of shareholders, even if they're tiny, to listen to what they have to say. And I find it's those kind of forums where you can get a bit more traction in getting the management team to answer your questions. What I've also found, and this is a gem for your listeners out there, many of South Africa's asset managers that take a more activist approach usually publish their proxy reporting and proxy voting statistics. So how have they voted in previous AGMs and what are the issues that they've focused on? So if there's an asset manager that you like or that you've invested with, go onto their website and search around for that, because that can also give you insights into what questions have been asked and how you need to ask them. So that when you sit with, a management team, or when you're posing a question or writing a letter to the board, there's a bit more context that you can add to it. So you can say, XYZ massive manager had an issue with the way you're implementing your remuneration. Or nowadays there's a lot of focus also on things like, your impact on climate change. What are you doing with ESG and your emissions? So those are things that you can try and corner management teams on, using what a lot of other more larger investors have done,
It's an interesting way of looking at it. And I suppose, Karabo, there's a ton of information out there about every company nowadays. I mean, especially if it's publicly listed. Yes. You can really spend, and I suppose you do, spend weeks going through just the details of one company, looking for patterns, looking for issues, looking for potential problems. I mean, that's what short sellers do professionally.
Yes, that is what short sellers do professionally for the companies that are listed. But as Aions, we don't participate in companies that are listed, So I wouldn't really have that much of an experience as to what I need to look for. But definitely, if you are supposed to be buying shares in a company, you'll need to look at the current publications that are being put out yearly, quarterly AGM reports and so forth to get a full understanding of how the company is performing and which direction they're heading in.
And I suppose the real question is always how much money are they making, right?
Yes.
I mean, if they're doing well, and I mean, this is one of the problems with Steinhoff, is that on fake paper, it looked like it was doing well, and that probably would hid some of the problems. People would have looked far harder if it wasn't doing so well.
Yeah.
Vincent, when we are sort of trying to actually get an understanding of what's going on in a company, I mean, I sometimes look at CEOs and I wonder, I always remember again with Steinhoff that Marcus Jooste was mad about horse racing. People older than me were like, if you're involved in horse racing, I don't know if I would invest money with you. Now, that's probably quite a prejudiced thing to say, but it also suggests that there's a gambling instinct there. So what I'm getting to is the personal lives of people. They shouldn't matter. Sometimes I wonder if people do watch those things very closely. How an executive just conducts themselves in a meeting can sometimes matter. It shouldn't, but it does.
Stephen, you're raising a really critical point, and going back to the function and the role of the board in terms of protecting you as a shareholder. The board is supposed to look out for conflicts of interest and activities that management of the company might be getting involved in that, could either distract them or create, that conflict of interest where they stand to gain more from doing something else rather than doing their best to help you, the shareholder, or you, the underlying client, get the best outcome. And there's that's a potential example where, in Eustace's case, I think the horse riding horse gambling is one extreme example of his behavior. But also, if you looked at some of the other issues that were brought up around Marcus Jooste, was his issues with SARS, which were, fairly public. And as a board, you have every right to ask for the tax affairs of, the executives on a company that and other directors to make sure that they're tax compliant. So when you start to see large issues like this, you then need to start raising, it certainly does raise red flags. And that's one of the important things, where when as a shareholder, you need to, if you don't see that kind of work happening, you should ask about it. And if there's things that make you concerned, you should write to the board. They have every duty to look into these kind of issues. So, I think investors should use whatever rules of thumb they've come up with, even if it is, look, this person's a gambler, and I saw them at the casino once, and I'm uncomfortable,
I mean, it's your right to sell and buy your shares, to ask questions, and they can give you answers. Vincent Anthonyrajah is the CEO and co-founder at Differential Capital. Karabo Makete is the partner and investment principal at Aions Ventures. Investment School this evening. How you, as an investor, as a shareholder, can force good corporate governance.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025.
The Money Show.
Investment School.
How do you, as an investor, as a shareholder, make sure that the company that you're invested in is properly governed? Vincent Anthonyrajah, CEO and co-founder of Differential Capital. Karabo Makete, partner and investment principal at Aions Ventures. Karabo, you've been dealing a lot in the unlisted space. So in a way, you have less information, perhaps less power. There are fewer regulations that allow you to really sort of ask the questions and get answers. In that space, you hold back some of the money, okay. Are there other things that you can do? Does it require a greater level of diligence from yourself as well?
Yes, it definitely does. So as Aions Ventures, we operate with the smallest of the entrepreneurs, so startups we deal with seed funding. So basically the first few rounds of funding that you'll get. And those are typically the least regulated, or the companies that have the least structural management institutions placed within their companies. So for an example, the CEO is called the CEO, but he or she can actually play the role of CFO, COO, and so forth, and therefore there's no separation of roles, and all the decisions are basically made by one person. So as an investor coming in, as I said, we use we hold back some of the money. But another way in which we do that is we stipulate in our term sheet. So once we award the funding, we'll say we would like rights where we have quarterly reports that are shared with us. We'd like to have rights where we can sit on your exco team. We'd like to have rights where, we can go to the extent of having access to your accounting systems just to keep track and make sure that we are able to steer the company in the direction that we needed to, so that we can get the valuation or the returns that we expect to make from our investment.
And I mean, you have to get really deep and dirty into the company, and there's a limit to how much you can do that because you're funding other companies too. I mean, it's a ton of work.
Yes, it is a ton of work. But as part of that work, starting to formalize the management within the companies so that they can be prepared for the next round of funding is part of what we do. So funny enough, we had one of the investee companies that had a little bit of an issue with their employees. And the problem with that was that they hadn't actually finalized their contracts with their employees. So then again, we took a step back and said, okay, guys, we need to make sure that we are addressing such milestones. And until such happens, we cannot move forward because you're going to keep experiencing the same sort of issues.
Vincent, the difference between unlisted and listed companies, you deal in both. Is it a lot easier in listed companies, or are you dealing with people who are actually quite good at using the rules to not answer questions sometimes?
Yeah, look, that's a great question, Stephen. And I think it depends. Like, we've had unlisted companies just where there's a high level of organization, probably some other, professional investors like Karabo, where they've put in things like a shareholders agreement, put in requirements that require, a certain level or size of auditor to look at the accounts and things like that. So that we've been pleasantly surprised in many cases. And then quite the opposite has happened in many listed companies where, sometimes it's actually quite shocking to see the lack of governance controls that are there. I think one of the things that's happened in South Africa over many years, it's just always been there, where I think boards find themselves under the control of very charismatic executives. And I suppose that's the same thing that happens in unlisted companies. And I think that's the thing you've got to watch out in both. What measures are there to ensure that someone's, just keeping an independent view. There's nothing wrong with charisma, but the problem is when someone starts to control and start to taint the board, that's when, very dangerous decisions can be made.
And Karabo, that's also the kind of person that makes you want to invest money with them in the first place. Isn't that always the danger?
Yes, that is always the danger. And that's why you need to take a deeper look into the founder and the people who are managing the company as a whole, and have, of course, a clear separation between the board as well as the founding team and the managing team of the companies, because it's very easy for them to, work very closely together, start influencing each other, and at the end of the day, the board ends up, looking out for the management instead of people like the shareholders or so forth.
They sound like a civil service. Vincent, we've got 30 seconds left very quickly. There are some organizations, groups of shareholders that work together. They try and push things. I mean, you can work together with those groups that maybe didn't exist a long time ago. Yeah,
so maybe I'll just give a shout out to one organization that I follow. It's called Just Share. I think they do a pretty good job, very heavily focused on environmental issues. But I think similar to them, they're large investor houses, you know the names out there. Just go onto their websites and you get a lot of information in terms of how they voted, how they focused on stewardship. So many of them publish what's called a stewardship report. I would encourage you look at that, and it really helps you at least think about which direction you need to move in with your investments.
Vincent Anthonyrajah, thank you, CEO and co-founder at Differential Capital. Karabo Makete, nice to meet you. Thank you for coming in. Partner and investment principal at Aions Ventures on Investment School tonight.
The Money Show with Stephen Grootes is brought to you by Absa Corporate and Investment Banking. Absa is a proud lead sponsor of B20 South Africa 2025.
Well, that's it for The Money Show this evening. There'll be a lot more to come, of course, on this radio station. We'll see you tomorrow, where it's Payday Friday. Stephen Grootes, it's been good to be with you. It's just gone 8 o'clock.